Donald Trump just posted this graphic. He's comparing himself to FDR, saying that while Roosevelt gave us the 30-year mortgage, he wants to give us the 50-year mortgage. On the surface, it sounds like a lifesaver. Housing is expensive, rates are high, stretching the loan out lowers your payment, right? Yes, but there is a massive catch that nobody is talking about. This new policy might get you into a home, but it might stop you from ever actually owning it.
Bing, bing, bong, bong, bing, bing, bing.
Today, I'm going to run the math on the Trump mortgage so you can see exactly what it costs you in the long run. The payment illusion. The sales pitch for a 50-year mortgage is simple: affordability. Let's say you borrow $400,000 at a 6% interest rate. On a standard 30-year loan, your principal and interest is about $2,400 a month. If we stretch that same loan to 50 years, the payment drops to $2,150. You save $250 a month. That sounds great. But that $250 savings comes with a terrifying price tag. Because you are borrowing the money for 2 extra decades, the bank collects interest for 2 extra decades. The debt for life math. Let's look at the total interest paid. On the 30-year loan, you pay back the $400K plus about $460,000 in interest. On the 50-year Trump proposal, you pay back the $400K plus nearly $900,000 in interest. You are paying double the value of the home just in interest fees to the bank. But the worst part isn't the interest, it's the equity. On a 30-year mortgage, after 10 years, you've paid off a decent chunk of the house. On a 50-year mortgage, after 10 years of payments, you have barely touched the principal. You are essentially renting the house from the bank, covering mainly the interest and depending solely on appreciation to build equity. When does it make sense? Does this mean a 50-year mortgage is a scam? Not necessarily. It is a tool, and like a chainsaw, it's useful if you know how to use it, but dangerous if you don't. Use case 1. You are an investor. You want the lowest possible payment to maximize monthly cash flow, and you plan to sell the house in 5 years anyway. Use case 2. It helps you qualify. You take the 50-year term to get approved, but you make extra payments as if it were a 30-year loan. This gives you a safety net for bad months, but keeps you on track to pay it off. But if you treat this like a standard loan and make the minimum payments, you will likely be paying this mortgage until you are 90 years old. The better way. The Trump mortgage is going to be marketed as the only way to afford a home. Don't believe the hype.
No!
You do not need to shackle yourself to 50 years of debt just to get a lower payment. There are smarter ways to lower your monthly cost right now, using interest rate buydowns, down payment assistance, or specific loan programs that don't cost you $400,000 in extra interest. Don't wait for a government solution that turns you into a forever renter. Click the link in the description to book a one-on-one strategy call. Let's look at your numbers and build a plan to get you into a home you can actually own.